So sorry, realtors and mortgage agents and everyone else. No rate cut today from Bank of Canada, leaving rates as it is. The markets were pricing in basically a 40% chance, 42% chance of a rate cut, a 58% chance of a no change, so it was expected. But you got this pause here along with a lot of uncertainty and a lot of comments from Macklem, the head of Bank of Canada, warning and giving out basically projections of what the economy could look like in Canada. Giving kind of two scenarios here, which I'm going to share with you in a minute or two. But let's first talk about the couple of comments that came out initially from Bank of Canada. So basically, they said a slight majority of economists were expecting no change. There is an unusual degree of uncertainty about the economy outcomes within any tariff scenario. Tariffs and uncertainty have weakened the outlook for global growth. Extreme market volatility is adding to uncertainty. The Canadian economy is slowing as tariff announcements and uncertainty pull down consumer and business confidence, as you know. Consumption, residential, investment, and business spending all look to have weakened. Businesses are reporting plans to slow their hiring. So here you go. The effect of the unemployment rate, which will soon be later felt. Our focus will be ensuring Canadians continue to have confidence in price stability through this period of global upheaval. Price stability. There's no price stability coming here, especially if inflation and prices and the tariffs continue. The guidance from Bank of Canada offers a hawkish basically bent, despite a statement filled with downbeat comments on growth. Monetary policy cannot resolve trade uncertainty or offset the impacts of a trade war. What it can and must do is maintain price stability for Canadians. So basically, he's telling you here, sorry, we can't do anything about it, especially with inflation. Monetary policy cannot fix Trump and the tariff and the trade war, which could bring prices up, which could bring in that recession scenario. Now, let's talk about the projections here, okay, which was quite important. So, Bank of Canada offered usually they give a base case projection, what their base case is. It's just one projection. Here, they gave two projections, a scenario 1 and a scenario 2. A scenario 1 is where most tariffs are eventually negotiated away. And scenario 2 is basically a long-lasting global trade war. And that's where things get really, really ugly. So in scenario 1, Bank of Canada basically projects that in 2025, this year, we'll see GDP about 1.6%. That's down from the previous estimates of 1.8%, so they slightly revised it lower. And then they expect next year in 2026, 1.4%, so lower than 2025, and then 2027 things to pick up. So that scenario is if tariffs are basically eventually negotiated away. Scenario 2 is where they think lasting global trade war. This is where the recession kicks in, and basically it gets ugly. So 2025, they basically say that GDP could fall 0.8%. And 2026, you could see negative 0.2%. Basically hinting towards a 4-quarter recession with in that year, and an ugly basically contraction in the growth metrics, which would probably thus result into higher unemployment rates and so forth. So in scenario 2, you would get a big drop. 2027, they would expect that to change to 1.6%. So you'll get a jump there. And that's because they'll probably do something in terms of monetary policy, printing of money, blah, 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 right? Now, with that, in scenario 1, You get inflation. If things, go away, inflation basically stays in 2025, 1.8%, ticks up a little bit in 2026, and a little bit higher in 2027. So they expect that inflation is going to slowly tick up if the trade wars basically go away. Scenario 2, that recession example I gave you, is in 2025, 2% would be the inflation rate. 2026, while everything's crashing in 2026, inflation would jump 2.7%, right? Hence why growth would drop, unemployment rate crashes in the economy, and so forth. So the crash would be kind of severe there. You would then get 2027 inflation coming down because people are not spending much anymore. So then you get inflation to be around 2%. This is their base case. This is obviously not how it may play out in reality. It could be way lower, way higher, depends where it is, but these are just the scenarios from Bank of Canada projecting that if scenario 2 happens, expect recession, expect crashes, expect inflation to be higher. So this negative scenario basically assumes the following, right? These permanent tariffs here. A tariff of 25% on non-US content of imported motor vehicles and parts, 12% on imported goods other than motor vehicles and parts from Canada and Mexico, 25% tariffs on all goods imported from all other countries, 15% tariff on all goods imported from China, to lift the total new tariff on China to 25%. So basically a harsh scenario, giving you their kind of two scenarios, and basically telling you that, hey, we don't know which scenario we'll fall in, because one day, tariffs could just be resolved, or the other day it could just get worse off. We really don't know. So a couple of comments in the press conference, which was interesting, is they kept saying we're navigating very carefully. Canadian economy started in a good place. And in March, we said we would be less forward-looking. Much has happened since March, but the situation is no less clear. They still have no idea what's going to happen, right? We're going to do as much as we can to support the Canadian economy, focus on price stability. Keeps talking about price stability. If inflation's picking up, are you going to hike rates aggressively, right? I think the recession scenario would bring in disinflation or deflation, but let's see, right? And again, it depends on how severe the recession is too. He also says he's heading into IMF meetings to soon and expect some clarity there. I don't think you'll get any clarity there, to be honest. Anyone using these forecasts needs to consider a range of possibility of outcomes. We did consider cutting rates, but again, not much clarity on U.S. tariffs. Therefore, we're holding on rates, and we'll see what comes in, right? So they're ready to cut rates. They're ready to help as much as they can. And like I said, like I've been saying on this channel, they're going to cut rates aggressively back to zero because something has broken, right? They're telling you here, they're waiting. And if something breaks, if you get scenario 2, then yes, they're going to cut rates. They're going to cut rates, they're going to stimulate the economy, and inflation picks back up, try to save the economy, and they'll go back to hiking rates again to bring price stability down lower. And it could be long lasting, like you said, right? Depends how long this trade war goes for. So both scenarios do not look good either way, but I'll talk about that in a second. Rogers basically said also the same thing, hoping for some clarity. We haven't seen dysfunction in the financial market, so they're not, they're not scared, so they're holding up. They said basically we've seen a big drop in Toronto housing activity, obviously expected with the fears, the tariffs, the prices, mortgage rates. Who the hell is going and buying COVID level prices in the property markets? Okay. Housing has had an outsized impact on our economy for a while. There was a real consensus on hold being the right decision at this point. Overall, messaging from the NPR has been a mess. Macklem is trying, and they're saying they're waiting for clarity, but also that even if they get clarity on tariffs, they will still be uncertain, but they don't want to move until they have certainty. So again, uncertainty, don't know, and hey, be prepared if things break. There you go. There you go. Bank of Canada telling you as it is, telling you the two scenarios. Now here, the two scenarios which I want to get back to. The first scenario, tariffs, they're gone. And that means rates stay where it is if growth keeps plugging along. That means rates will stay where it is, activity will stay where it is for some time until, you get some easing in the economy and, things get better there. So it will be kind of a sluggish path higher with higher rates. So don't expect the magical 0% going back to the zero bound and then, property prices shooting through the roof. The second scenario is pretty bad too because you got a recession, job losses, you got rate cuts, stimulus from the Bank of Canada, and then inflation ramping back up higher again due to all the stimulus, right? Now again, that is dependent on how severe this recession ends up being. If it's not that severe and they do all that money printing rate cuts, then we're going to go back to hiking rates again. And then that's going to also put another lid on growth in the economy. So you could feel the same cycle again, like in 2022, 2023, in the future, if that were to be the case. So either way, how I see it in both scenarios doesn't really look good. You might still get the sluggish growth, and if you get really an ugly recession, you can bring prices down there. But with tariffs and the taxes, like we heard from Macklem, it would take a very long time to recover in terms of the Canadian economy. And he even said that it's possible that it may not even recover, right? Like we will recover, but it will not be how it was like before. So that's Macklem saying it, not me. Okay, that's Bank of Canada Macklem saying that. I did a video on that. You can check it out on my channel. So yeah, that's all I have to say, really. We'll see and continue to watch how this trade war escalates. And it's just flip-flop every single day. You gotta be news dependent, headline dependent. Markets don't know. Nobody knows. Okay, at the end of the day, nobody knows what the hell is going on. Okay, not your pundits, not your gurus, not your real estate bros or your real estate gurus, your stock market bros and gurus. Nobody knows where the hell this is going. You just want to cross your fingers, hope for the best. If there's an opportunity for you, great, fantastic. Just remember to always manage the risk and the downside. Simple as that. It's all about risk management. It's always about risk management, but now it really matters even more because of how volatile and crazy things are. Simple as that. Okay, so anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers. Bye.